Hi YouTube, welcome to day 4 of Blueprint Profitability series. So day 3 was all about traps, the phase where most beginners enter too early and lose money. So today we move into the next stage of the trend cycle, and that's recharge and momentum. So this is where the real entry begin and where the market gather energy for the big move. So what is recharge phase? So the recharge phase starts immediately after the trap end. Recharge means the market moves temporarily against the main trend. It builds temporary structure opposite of the main direction. Liquidity is collected, the market gather orders to create a real move, and traders get trapped on the wrong side. So recharge is not a reversal, recharge is loading phase. So why the market create recharge? Okay, so why the market create recharge? The market cannot create momentum without fuel. Okay, so that fuel comes from stop losses, trapped traders, liquidity pools, emotional entries, consolidation zones, imbalances. So if the market doesn't have enough liquidity, momentum cannot happen. So recharge continues until enough liquidity is collected. So sometimes it's short, sometimes long, sometimes it's choppy. The duration depends on how much liquidity the market needs in that area. So the recharge ends only when the market has collected enough orders, enough stop losses, enough trapped traders, enough volume. Then the next phase is momentum, and where the next phase starts. So how we know when the recharge phase is finished? So to confirm recharge is completed, so look at the smaller time frame, for example 30 minutes, 50 minutes, 5 minutes, not under 5 minutes. So recharge ends when the structure flips back into the main trend. Example, in a bearish trend, recharge gives temporary bullish structure. Recharge ends when the smaller time frame switch back to lower high and lower low. So this tell you liquidity is full, recharge is completed, market is ready for the momentum, so the real move is about to start. So here we have example in a bullish trend. Okay, we have here example in a bullish trend. So we have here swing high. What you want to mark up, the first thing what you want to mark up is swing high. So we have here swing high, and the price did break the swing high from this area. So after breaking it, the price will start to create for us a trap. Okay, so this is the trap, higher high, higher lows. And from this area, the trap end. And from this area, the recharge begin. Okay, so the recharge start to make for us lower low and lower high. So it will continue making that until price stop. So until the price stops making lower low and lower high. So then we switch to 50 minutes or 5 minutes, and what we see here, the price stopped making lower low and lower high. So what the price does here is making consolidation area on the smaller time frame. So here are buyers, 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 buyers. It couldn't break this area and making lower low and lower high. So this is for a reason. So we have here also sellers. Okay, so we have here sellers. So this candle did break this area. So then the next move is momentum, and that's what here happens. Okay, so then it start to make bullish trend, and it never came back. So you have here also to combine sessions with the structure. So this green line is London session. Okay, London, and this white line that you are seeing here is New York session. So what we have here is, so this was, so from this area to this area is Asia session. So in this area we don't trade in Asia session. It start to make for us consolidation area. Okay, and then when London session opened, this candle did break the consolidation on the lower time frame, and then in London session from here we take trade, stop loss under structure, okay, under low or in this area, and they're targeting, for example, this high or another high on the higher time frame. So that's why you need to combine structure plus sessions. So now structure tells you where the market wants to go, sessions tell you when the markets want to go there. So this is why professional traders combine structure plus sessions plus liquidity. Let's break down how sessions influence the trend cycle. So Asia session, slow, is low volume, mostly consolidating, and trap and early recharge often appear here. So Asia session is usually preparation, not direction. We have also London session. So London session is your bank open, real volume begins, market starts choosing direction, recharge phase becomes clear, and structure is easier to read. So London session mostly reveals when the recharge is completing, but not always, just more often. We have also New York session. So New York session is high volume, US institutions open, big moves happen here, and momentum after launch here. So breakouts are real, liquidity gets taken. So most momentum moves come during New York session, but not every single day, only most of the time. Okay, so why sessions matter? Sessions are critical because they show when the volume enter, they reveal when the fake outs happen, they decide which moves are real, they help time entries correctly, they bring institutions activity, and they align with the liquidity collection. So perfect structure plus a wrong session equals to lose the trade, and perfect session plus wrong structure equals to loss. So you need both. So what is momentum phase? So momentum is a real strong move in the direction of the main trend. Momentum only comes after a trap, recharge, structure flips, session volume, and the momentum is clean, fast, safe, and powerful. So momentum is the phase we want to trade. So how to enter using momentum? So enter on the first pullback after the structure flips back into the trend direction. So stop loss below swing low for buys and above swing high for sales. If that swing breaks, momentum is invalid. So take profit. We take profit where the opposite side losses. Okay, so buying is TP above swing high and selling TP below swing low. We always exit at the liquidity. Okay, so we have here, I will show you example. Okay, so here so here we have a swing. Okay, we have here swing. This all was just trap. Here we have lower low, lower high. Okay, so this all is a trap, and from this area to this area is the recharge phase. Okay, so this is the recharge phase. So where you want to enter the trade, is first thing you want to focus on the session. You want to enter in the session, and the second thing is you want to switch to lower time frame to see the structure and if there is consolidation area on the lower time frame. So here we have on the 50-minute or 5-minute consolidating area in Asia session. So here we don't take any trade. So this green is London, and from this area to this area is New York. So what here happens is this was all recharge. Okay, so this is all recharge, and here the recharge ends. Okay, so then the markets start to create higher highs, higher lows, and then in an Asian session, so the market start to create consolidating area in Asia session. So then when London opened, the candle did break the consolidating area, and then from this area, when the consolidating area is broken, we take then trade. So for example, so I will take here then trade my stop loss below a swing high on the lower time frame. For example here you can you can put your stop loss here or in this area, and then targeting, for example, swing high, okay, on the higher time frame, or if you have also another swing high, you will target it. So here in this area you will have maybe like 1 to 6, 1 to 7 RR. So this model have a very big RR because you are trading with the trend. So you can also hold your trade for more days. You can hold your trade for 1, 2, 3 days. So because you are trading with the momentum, you are trading with the structure. Before we get into the advanced part, let me make something clear. So I don't take trade inside consolidating area. When the higher time frame is consolidating, price is moving both direction, liquidity is everywhere, volume is low, and the market has no real intention. So anything can happen at any moment. Inside consolidating, you don't know where the market will go next. So there is no clean structure, no clear trend, no clear liquidity direction, and because of that, I do not risk my money in middle of this consolidating area. So it's one of the most dangerous place to trade. However, there's advanced technique that can be used, but only if you fully understand the structure, session, and liquidity. So extremely powerful, but also very risky. So now let's break down this advanced method. So sometimes the higher time frame on the 1 hour or 4 hour enters in a consolidating zone. So this is where big institutions accumulate the positions, liquidity builds on the both sides, the market prepares for the strong breakout. Here is how I approach it safely and logically. Okay, so step 1, wait for London or New York session. I never take breakout inside consolidating during the Asian session. Volume is weak and the most breakouts fail. So, but during London or New York, banks enter, liquidity enters, and the breakouts becomes real. Okay, so step 2, look for a smaller time frame consolidating inside the big range. So inside the higher time frame consolidating, I drop to 30 minutes, 50 minutes, or 5 minutes, and I look for the mini consolidating area. This is where the market is quietly loading liquidity and preparing for the breakout. And step 3, breakout in the direction of the higher time frame. So for example, we have 4 hour is bullish, 1 hour is consolidating, 50-minute mini consolidating, London session opens, price breaks the 50-minute consolidating to the upside. So this tells me buyers are in control, sellers have been removed, liquidity was collected, and volume enter in the market. The breakout is clean and valid. So why sometimes enter without waiting for the recharge? In this specific situation, the high time frame consolidating acts as the recharge and the lower time frame consolidating acts as the loading zone. So the breakout is the start of the momentum. When all of this line up, you can enter immediately after the breakout without waiting for the full recharge phase, because the consolidating is already did the liquidity work. So these are the trades that explode instantly because the market spent a long time to build the pressure. So we have here example 1, we have here on the 1 hour time frame consolidating area, and here on the 30 minutes we have another consolidating inside the big consolidating area. So the price here did break the mini consolidating area and then it started to go up. So here in New York session and London session, it was creating a consolidating area. But at this time, Asia session, when the price did break the mini consolidating, the price pumps. Okay, so in this specific situation, any of sessions matter when the breakout becomes valid. So for example, if we have mini consolidating and London open and it did break the mini consolidating and the big consolidating, then this is valid to enter with the main trend. So we have also here example 2. We have here example 2. Okay, so this was on the 1 hour and this mini consolidating was on the 5 minutes. So here we have a bigger picture. This is all on the 1 hour. This is on the 5 minutes. So here on the 5 minute, it was in Asia session. Okay, so from this area to this area is Asia session. And then when London opened, it did break the mini consolidating and then it started to go up. And also it did break the big consolidating on the 1 hour time frame. And here where I take my trades on the big range when the market break the big range, because sometimes on the mini consolidating it will go up, okay, and then it go down and then it will go up. So I don't risk this. Okay, I take only when the big range is broken, and then I take my trade with the trend. If the trend is bullish, so it's start to make for me consolidating area and the price did break to the upside with the volume, so with the session, and it did broke and it did close above the area, then I take my trade. So this is day 4 recharge and momentum phase.